Hey, it's your boy Courtney C from Fit Money IQ, helping Canadians live with more freedom and less financial stress. Today, I'm here to talk about the reverse mortgage, what no one tells you about the reverse mortgage in Canada. And the first thing I want to rebuff or dispute is the notion that you lose your house to the bank. Nothing could be further from the truth. There are a lot of individuals who, because of lack of understanding and fear mongering, will take a look at the reverse mortgage as not an ideal product for the marketplace. It is absolutely a wonderful product if you understand it. I'm going to help break that down for you today. So, a reverse mortgage is not what most people think. You do not lose your hard earned asset to the bank. Nothing could be further from the truth. Just like a regular mortgage that you go to the bank and get when you purchase a home, a reverse mortgage is exactly the same. It is a loan secured against the property. Now, in a reverse mortgage, the big difference is the interest you paid on the loan, calculated the same way, semi-annually, like any other loan. The interest is accrued and compounded and then added to the back of the loan when you're ready to pay it out. That's the only difference. What it does is it frees up Canadians 55 years or older who are primary homeowners living in the home, and it allows you to pull money from your home, the equity from your home, and live a life of dignity and freedom in your retirement. Most seniors are living on fixed income, and this product was designed to free up cash flow so you can live the life you want and have some freedom in your retirement. You've worked your entire life for this. And so the equity in your home not doing much good, we can release that, allowing you not having to live paycheck to paycheck, but having some freedom, whether it's to travel. A lot of people have put that off until their later years and then realize that they didn't have a defined benefit plan. Their money is not as long and strong as they thought it would be. Could be to renovate the home to make it more accessible. As we age, our body starts to deteriorate. Maybe we can't take the stairs as well. Maybe we need a chairlift because we've had an accident. Maybe we need to renovate and have our bedrooms on the main floor rather than going up to the second floor. There are all sorts of reasons why people will need to revamp or renovate their home in their retirement and senior years. The other one is the cost of getting into a home right now is very high, and there are seniors who have equity who want to give a living inheritance to their loved ones. And so they may access the equity this way to help their loved ones with a down payment for their home. So there's a number of reasons why individuals will access the money in their home. But here's the thing. That interest that I mentioned that you're paying semi-annually, just like any other property that you have, any other mortgage you have, the only difference with a reverse mortgage, you're paying it down the road. It's being deterred or deferred down the road, whether it's 10 years, 15 years. So let me give you an example. You have a $1 million property. You want to access $200,000 from that property, maybe to give 100,000 to your grandkids or to your kid to get into the market. And you have 100,000, you want to use part of that as renovation money and part of it as travel. You have mounting bills that you're just barely getting by on a regular basis. This is going to give you some freedom and some peace of mind. The interest on that loan, let's assume it's 6.5%. It will be higher than what you're paying on a 5-year fixed mortgage at present. And it's usually in line with the line of credit interest rates. So 6.5 to 7% is typically what you would expect in the marketplace. That loan at 7% calculated over 10 years, 15 years is added to the 200,000. So maybe you're paying back 350,000 or 400,000 at the end of the loan. However, $1 million asset, which is the value of your home, is also appreciating. Remember, in Canada, the average appreciation of property is about 3% over a 10-year cycle. So now that $1 million over 10 years, 15 years has grown to 1.5, 1.8 million. When you sell the home, because there's a number of things that will trigger paying back this loan, you can either sell the property, pay off the mortgage, which is a reverse mortgage, just like any other loan to the bank, and then the remainder is yours. If you decide to leave the home and move into an assisted living facility as we get older, we need more care, the same trigger will apply. You need to sell the home, pay back the loan. The misconception that a lot of individuals have is that you will not have any equity left at the end of your reverse mortgage term. That is not the truth. The truth of the matter is, if the home is appreciating 4%, you are going to have equity in there, even if you have that loan at 200,000 at 7%. So that is one misconception that we need to clear up. If you're not sure about the numbers, I can walk you through it. Actually, I'm going to post an example here so you can see how that works for you as far as what equity you would have remaining after 10 or 15-year period. Now, one of the best things about the reverse mortgage is it frees up your cash flow. Most seniors are living on a fixed income. They may have a small pension, they may have old age security, or they may have Canada pension that they're getting, but it's fixed. Rents stay the same. If you're living in a home, your property taxes are going up, the cost of running your home is going up, utilities are going up, and so forth. Groceries, medication, all those things eat away at your monthly ability to manage your expenses and live a life with dignity. And so accessing equity in your home allows you to live with some peace of mind and avoid all those month-to-month situation. So in summary, what you need to understand about this product is it's a tool, it is not a trap. It is allowing you, right, to move from survival to dignity and control over the last portions of your life. You've saved, you've invested all these years. It is time that you have access to the money that you've put aside to live with dignity and in control of your financial life. If you are working with a parent who's a senior, or if you're considering this for yourself and you're 55 years and older, I would love to have a conversation with you. I would love to break this down even further, to dispel many of the myths associated with this product. It is a beautiful product. It is not for everyone, and it's not for every stage of life. It is not a short-term fix. It is a product designed for 10, 15, 20-year, right, where it gives you the stability. It gives you the ability to walk into your retirement with confidence, peace of mind, knowing that you're not struggling day by day, but you've got the luxury and the freedom to live your life with dignity, to live your life the way you want it in retirement. Again, the easiest way to reach me is simply leave a message, DM me, or you can find my email in the bio. I'd be more than happy to have a conversation with you. No obligation, but just to help you understand this beautiful product that is designed to support our seniors to walk into retirement with confidence, with dignity, and knowing that they are not alone, and to alleviate the financial stress that many of them are feeling at this particular time in their lives. Once again, Courtney C., Fit Money IQ, looking forward to connecting and helping you with your financial needs. Have a great day.